All right. Good morning. Good morning. Wow. Creature of habit. Good evening, everybody. Hope you guys are doing well. Happy Thursday. Another survived choppy day. How did everyone's rest of your trading days go? Can't hear anything? Sure. My mic seems to be working fine. You guys confirm? Can you hear me? Okay. So not me. Try refreshing maybe, or I don't know, check if anything's sorted out. It doesn't appear to be low on my end. I crack it up a little bit, but all right. So yeah, same format and deal like always, right? Basically try to answer as many questions as we can until we either run out of time or run out of questions. So happy to open up the floor and yeah, start firing away. So who's got the first question? All right, so we got a couple questions here stacking up. Let's kind of fire through them. So I'm sure you've answered this multiple times, but how do you decide to enter a trade? So talked about this a little bit on the stream this morning. It was kind of the rant of the day, if you want to call it that. But primarily, what I'm looking for, right, is A, for my setup. So once my setup criteria has all been established, my objective is to enter that trade or decide to enter that trade at the moment where I feel most calm, effectively, right? So once it's inside my risk reward zone, once it's a justifiable entry, once I know my stop loss, once I know my risk, right? Once I've answered all those questions, I'm basically just trying to find that little moment of peace where I enter from a position of strength, right? Where I enter from a position where I'm in control over my emotional state instead of reacting to it. So I want to avoid entries where I feel like I'm chasing it or I'm rushing into it, or if I don't get in, I'm going to miss it, whatever it is. I want to avoid clicking that button because of that like fear, greed, annoyance, whatever, and then really enter my positions from a position of okay, yes, everything tells me I should go. I'm in control. Let me get after it. The reality there, though, as well, right, is like I'm looking for that space in like a 10-point range, right? So from where my entry zone to where my stop loss is a really tight spot. So it really is about just looking for those micro details in those little tight ranges and learning how to trust your emotional state and not react to every version of it that you get. All right. I found the new trading platform a bit glitchy. Is that being worked out? Shirley, can you explain the glitchiness that you are experiencing? So what's the legacy member discount code for the prop? That'll be shared inside the DTR room once it's back up available. Hopefully by this evening, we'll see if they get back to me in a reasonable time. We'll have everything back up and running again. Last week was super crap anyway. To avoid trading these, like, is there some signals that super choppy markets are ahead? I guess, right? Like there always are, but this is the reality of trading, right? Like it's not every week is going to be the best week ever. Some weeks are just going to suck. And unlike another job, right? When you suck at trading or you have a bad trading day, you don't just waste your time, you cost yourself a lot of money, right? If you screw up your job, I don't know, you put a typo in an email or something like that. It's not like your boss deducts, $5 for every missing comma. It's you're still going to get paid, right? And so that psychology, getting comfortable with it, managing it, that is a huge part of it. The other element too, though, right, is just being honest with yourself. Sometimes you're not going to feel your best, and yeah, you'll do really well in avoiding trading on those days where you're not feeling your sharpest. Something that I'm a little bit of a hypocrite about, right? Because I tried to power through always, and that's not always a very good thing. And I'm sure you guys can tell when I'm like pretty burnt out. So managing that and managing those like emotional highs and lows, that's a part of it. And if you aren't comfortable with having a red day, a red week, or even a red month, like that's not something that you think you could ever stomach, you probably need to ask yourself, like, is trading actually for me, right? Because we're going to have a lot of losses left. One of my favorite reframings I ever had in my career was like really down after a big red day, like just got my ass kicked. And my boss came up to me, he asked me like why I was so sad or like why I was so miserable. And I told him like, oh, like worst trading day ever, got my ass kicked. And he asked me, Michael, like, do you like you say you want to be trading for the rest of your life? Like, is this true? I said yes. Then he said, like, okay, if you want to do this for the next 60 years, why do you care what happened today? If you're lucky, you've got 10,000 losses left in your career. And I love that, right? Because it reframed it for it to actually be a positive. I think where losing can become incredibly frustrating or where it beats you up mentally is when you both lose mental capital, but then you don't learn anything from those decisions, right? So it's like you've been treading water, and then you have a big, paralyzing red day or like a really bloody red day. And then that just beats you up so emotionally that you don't actually learn anything from it. So then you go back to treading water, you feel like you're just about to get there, and then the same thing happens over and over and over again. So it's a commitment to getting comfortable with embracing process based elements, finding ways to gamify your losing, and just being honest with yourself. If you don't feel like you're very best, you don't need to trade. And just because I'm trading doesn't mean you have to be trading. I'm not always going to be my best either. We've all seen those highs and lows. So it's important that you're selfish, because I'm going to try to take off the days that I don't feel good. And you should try to do the same thing for yourself too. So Shirley, you're describing what's happening when you trade during the roll, right? Where you think you're setting an entry on one, but then the spread of the roll contract is stopping you out. So that's not a platform issue. That is a poor technique issue. So I don't think that your statements are relevant to the actual platform itself. There's always going to be a spread between the June contract and the March contract, and that's what was stopping you out. You don't need to have a take profit set. It's the exact same as every other trading platform, right? So Volumetrica is, yeah, it is effectively a trading platform that uses DX Trade as the broker, right? So that's the data feed that we're using. But we're using their effectively charting software, right? Okay, today before our trade, you were talking about watching the inside bar for a possible fake out. What are some indications to tell it's a fake out or it's a possible breakout? I mean, you just got to define what they are, right? A breakout is something that moves above a high or moves below a low and holds and pushes through those levels, right? So if that's what a breakout is, what's a fake out? Well, a fake out's where it looks like it's going to give that move and then it retraces back to where the move started as fast as the move happened or faster. So fundamentally, it's just understanding and having that definition clear in your head. And once it's clear in your head, you can see, okay, did this flush and hold or did this flush and bounce back? It becomes a binary. If it flushes and bounces back, fake out. If it flushes and holds, breakout. Okay, so on the last call, someone asked you when you should start trading more contracts. You listed a number of virtues and attributes. This time I have a pen and paper. So Tony, it's not a like a complete list of things, right? It's not like, okay, you did your 10 push-ups and you tightened your belt 3 notches and you kept your caloric intake to 2,000 calories, so now you're going to be a profitable trader. Like it's not like that. More about the self-reflection, right? So your job is to work backwards from your trading objective and to use that goal to figure out what you're basically like missing to get there. So the framing, right, that you'd want to think about. If I was a trader who was making 10K per month or 20K per month or 100K per month, whatever, or 100K per year, whatever your metric is, right, that you want. Okay, if I was making 10K a month so I could spend more time with my family, right? Then you're saying, okay, view yourself in the future as being that trader. So I'm Tony, I'm spending, all my free time fishing and doing whatever I want to be doing, and I'm using the market to accomplish that. So close your eyes, visualize that, and then ask yourself, what would that guy be doing that I'm not currently doing, right? Or what would that guy be doing that's different than what I'm currently doing in my trading? Now you have an idea, right, of what's missing inside your process, and you can start to gamify, right, fixing those things. So maybe, right, you'd visualize in your head that that guy is really good at closing as their P&L is increasing. And you see your own trades and you see that you're constantly panic closing as your P&L is going down. So instead of being the panic closer, you want to be more like the trader who is in your head, right, of being the winner and the consistent trader, right? So you do the behavior that's more likely to get you there. And what your objective is, right, to scale up your trading and increase your sizing and do all those things is to figure out what those 2, 3, 4, 5, 10, 20 things are and to judge yourself on that on a weekly basis. So instead of judging yourself on your P&L, judging yourself based on how well you followed your rules or how well you followed your process or how well you did those things that you said you were missing that would get you to your trading target. And then if you hit those things, right, you do that every single week, or, end of the week on, the 20 trades you took, you did it on 19 of them. Amazing. Good. You've proven to yourself that you can manage your risk and you can manage your process. And now it's time to push that level further, right? So you've proven that you can improve the quality of your technique and now you can handle the increase in risk. And so it's just about constantly repeating that self, right? Looking internally, asking yourself what's missing, making a bunch of tests basically to see how you can solve for what's missing, and then finding reward structures once you've overcome those problems. So Corey, that's what I mean, right? By gamifying the process. I choose specific technique-based things to judge my trading on instead of P&L. The belief has to be that P&L happens once my technique improves. It's not that I'm going to make a ton of money and then become a good trader. It's you become a good trader and then make a ton of money. So it's about flipping basically what that desperation goes towards. You want to flip the desperation away from the dollars and cents to being a desperation to getting better. So if you can like get more hyper focused on the technique things that are slowing you down, the money actually ends up coming quicker. But when you focus on the financial stuff first and foremost, you end up getting sloppy in your technique in pursuit of those dollars. You basically just want to flip that perception in your brain. And if you can get really good at gamifying it, then you're going to start to even get pissed off on green days. And that's when you know you're starting to get the hang of things. All right, what's next? What you guys got? To be honest with you, Connie, I have no comments on any like third party um like trade copiers or things along those lines. I have not tested anything. I've not looked into anything along those lines. Officially, DTR and day trader funding does not provide any support for third party tools or softwares. All right, guys, let's stack up a few questions. Yes, the volume candles are not necessary. All you have to do is you just click this button here and you change it to normal candles or bars, or I guess you could do a line if you really wanted to. All right, so it doesn't matter. I use volume candles because I like how they look. But yes, there's no restrictions there. Who's got some trading questions? This is not a tech support call. Who's got some trading questions? Honestly, I don't care. For me, it doesn't make a difference. I think, yeah, like the candles are kind of. I don't have a favorite. I would say that I probably spend the most amount of time on the two because I get the most possible opportunities for confirmations, right? So the 2 min, gives me, I don't know how many more candles a day it is versus the 3 min. I'm not smart enough to do that math in my head, but it just gives me more daily candles. So more candles in a day. More candles in a day gives me more opportunities for setups. So kind of like that. Well, better entry. I mean, better entry is relative. Pretty happy with the entries I get most of the time. We keep our risk to be less than 10 points or 10 points or less. That's pretty good. So I don't think that entries are my problem or that risk is my problem. I don't think that follow through is my problem on my setups. So no reason for me to make any dramatic changes. I got one today. Today you had a red bar, but entered long and it took off, which made us all money. How did you know it was going to take off long? So all it was, right, was this breakout setup here. So this was my setup candle, right? This one here, 948. So breakout through high of day. My confirmation occurred on the next one because 948 didn't give me increasing outlier volume. Sweet. Next candle, right? We talked about what's a fake out versus a breakdown. Well, here, right? Flushed and then bounced back, right? So clear fake out. We actually bought it, right? Near these lows. and then played the move here to the upside. Once this candle closed, didn't actually show us the strength that we wanted, so we knew we needed to get out here as P&L is increasing. Exactly what we did. We found ourselves a good opportunity. So this red candle didn't change my thesis from these two green candles. So this was nothing to be scary or scared about. In general with my entries, right, I want to be buying when like buy low, sell high, right? So what does that mean? Well, it means you're generally buying, right, if you're long when the candle's red. And if you're short, right, you're buying when the candle's green. You're buying as the market is moving against your thesis to a certain extent. That helps you tighten up your position sizing, allows you to get much better risk reward, and it creates asymmetric upside. Like on that trade, even though this wasn't a very significant move, my entry was like I had 7 points of risk on it, all things considered. Right, so it looked something like this. My entry was 72. Call it there, right? And my exit here was 30. It was 0775. Something like that, right? So let's get rid of this. Here's my stop loss, right? So I'm risking all this to make all this, right? That's pretty awesome. So I'm risking, let's call it 7 points to make 34. It's a pretty amazing risk reward ratio. I'll repeat that scenario all day long. And that's what gives me, right, the opportunity to be green. This setup itself today wasn't necessarily anything spectacular, but buying a really aggressive entry, right, after a significant fake out, being patient, waiting for the price to develop, that's what gave me an easy entry and asymmetric upside. So it wasn't that I was necessarily confident that the market was going to go higher. Not really. I don't really ever know what the market is going to do. It's that the market gave me a mathematical bet that said, betting that the market is going to go higher, like I have no choice, but I have to, right? So it's like the math, the probabilities told me that the trade was going to be a good one. And 6 times out of 10, it is. On the 6 times that I'm correct, right, I'm going to make the 30 points. The 4 times that I'm wrong, I'm going to lose the 7 or the 10. And I'm happy to repeat that formula all day long. So binary is just a yes, no, Susan, right? So I'm trying to create something that's a yes, no question. So like a binary thing in this context, right, is the candle strong, right? So is it full? That's a yes, no. Is the volume increasing? It either is increasing versus the previous candle or it isn't, right? Again, a yes, no. Is it an outlier, right? Is it above the white line or is it not? So again, yes, no. I'm just trying to create scenarios where I have only 2 options and removes all the ambiguity that maybe could happen once emotions get into play. Yeah, so the discount, right, is if my reference price is the blue line. Okay, my stop loss here is 65. So my actual reference price would have been 75, right? So if I buy at 72 instead of at 75, I just bought a 30% discount, right? If I buy it at 70, then I just bought a 50% discount. So I'm buying a relative discount to my entry. Does this not increase the probability of getting stopped out several times before the trade goes in my favor? Yeah, sure. Absolutely, it can. But I don't care, right? If I'm risking 3 points, 4 points, 5 points, and my win on a shitty trade is 35 points, I can take that setup 7 times in a row before I don't have an expected positive value, right? So the ego of being wrong is irrelevant. The math tells me that the thesis is correct, that as long as I'm correct more than 1 out of 7 times, 1 out of 6 times, I'm going to be profitable making that decision 1,000 times. That's what I care about. I don't care about how it makes me feel in the short term. That's irrelevant. It doesn't drive my trading decisions. It's if I take this trade 1,000 times, do I have the expectation of being profitable at the end of those 1,000 trades? So if I have risk reward scenarios like that, I have a win rate that's like 52, 53%, and my average win is 3 times bigger than my average loss. Yes, I will rinse and repeat that coin flip all day long. Do I think that 1030 reset would have been a time to revisit? So not my personal strategy here, right? I would have needed a breakout above high a day. Once a high is established, the risk reward, right, kind of changes, because instead of looking for a move towards these extended lines, right, that red line, my target then becomes high of day. So 546 in that context, which for sure could have been possible. You know, on a day like today, it's still about 100 points, but generally not a setup I like to trade because you're trading in a compressed market. I'd rather trade mean reversions, right, failures off the highs, or breakouts once those things have been established. Do candles make a difference? Well, yeah, candles are a huge part of my confirmation standards, right? So I need strong candle patterns. I need strong candle shapes. I need strong volume profiles to all sync up with a breakout narrative, right? Or a breakdown narrative. So yes, they're a huge part of my confirmation. Do I look at like a rising wedge on the 5-minute? No, not really. Don't care about that. I more look at those types of patterns on like daily timeframes. But at the moment, we're so range bound that it's not really relevant. What else you guys got? Is your stop loss usually 7 to 10 points? So my reference price to my stop loss is always 10 points or as close to 10 points as I can eyeball it. From there, right, Norman, like you said, we're trying to get a discount, right? The bigger discount I can buy, the better. The less I lose when I'm wrong, the more I make when I'm right. So I don't know if I saw like my favorite supercar on sale for 30% off, I'd run to go take it, right? Same thing with a trade. If I can find a 30% discount, I should be excited to take that. No, pyramiding is just a math thing, Tony. I wouldn't worry too much about trying to pyramid team, right? You start worrying about that once you got a couple payouts under your belt, once you starting to make some money. Don't complicate things and increase your emotions further. Well, 5 points, I don't think I can always get that entry, so it becomes challenging. 20 points, I don't think that it's good, right? Because if I'm not green right away or nearly right away, what else am I wrong about? So 20 points when I'm looking for a 30, 40, or 50 point move, that's not enough margin of error, right? What else we got? Yeah, well, the entry candle I don't care about, right? It's the confirmation candle. So I will never go long after a bearish confirmation. right? I would only go long after a bullish confirmation. So until that candle gets invalidated, I honestly don't care what color the next one or next couple are. It doesn't make a difference. Which particular number, Andrew? Like the range size, the profit target? What do you, which one? While we wait, let's stack up a few more questions, guys. Yeah, at the moment, guys, we're still not accepting new purchases, right? Hopefully, maybe by tomorrow. Once that's live again, I'll make sure to share the promo code with everybody. Don't worry. Like, I want you guys to be trading with DTR, right? So, like, I'm just as in a rush to get you guys onto a legitimate platform and somewhere that's not going to screw you. So, don't worry. I'm working overtime here. I promise. Andrew, which number are you looking for? All right. So while we wait, you're always using the fake out entry technique. I've never seen the stop loss at the low of confirmation candle for a long. And yeah, you've probably never seen the low or the stop loss at the low of low of confirmation. Honestly, I switched this up in like September-ish. Like early September, maybe end of August, right? That type of period. Spent the whole summer feeling like I was basically just getting faked out on every single one of my trades. And at the time, I was doing my stop loss low confirmation pretty much on every entry. And it just was not working for me. And what I could see on a vast majority of my trades I got stopped out on is that it would make a move lower or make a move higher and then give me the move that I wanted. So just started to use the fake out entry technique because my data made it obvious that my current stop loss wasn't working the way that I expected. The kind of other benefit I think of the fake out technique is it has allowed me to tighten up my average risk quite significantly. So I would say when I had that confirmation stop loss, I'd often be 15 points, 20 points, right in that range. Whereas with the fake out, I can consistently get much tighter, much better risk reward, and I'm either green right away or I'm stopped out right away. So it's ended up being like a change that happened out of P&L necessity, just because my technique was making it obvious to me that I was leaving money on the table. And it's actually ended up being amazing in how it's protected my mental capital. And yeah, I've driven a lot of positive changes for my trading. Okay. Sounds good, Andrew. Yeah. So like I would say more than anything too, guys, like the 10 points, it is a lot because I know that if my risk is the same, or I'm looking for my entry at the same point each time, then my risk is the same each time on my trades. I never have to think about my position sizing, right? Because I know, okay, always 10 points, 5 contracts, I'm risking $1,000. I'm okay with risking that much. So sweet, right? So it's like it's there because it's easy and repeatable, because it's possible, because it makes my life easy, right? Like the less I have to think about or like decide during when I'm looking at a trade, the easier it is. So that's really all I'm trying to do is I'm trying to keep that process really simple for myself and hopefully really simple for you guys too. You can see the patterns behind it, right? And then almost like the faster I can set up my entries and the more like muscle memory that process is, easier it is for me to find that like calm feeling for when I'm looking to click submit, right? If I'm not having to answer those questions, they're basically like pre-filled in, like they're a pre-filled in credit card on Amazon or something like that. It's a lot easier to make that decision and click submit when you're feeling confident, right? So that's really the whole objective is I'm trying to make it easy for myself mentally to be in a position where I can feel calm. And the more consistent my variables are, the more repeatable they are, right? The easier it is for me to actually almost like artificially create that calm feeling, right? Because the same thing happens on each trade, right? The same process. It ultimately feels the same. Pretty much doesn't matter how big the range is. I'm still looking for that 10 points. So that like muscle memory or routine creates a lot of really good mental patterns. And I think that provides an excellent level of, yeah, we'll call it insurance for my mental capital. All right, what else we got? Any other questions here, team? Any other questions? So I don't believe in the idea of trying to cap your P&L upside, right? Um, Short term, your focus should just be constantly on closing as your P&L is increasing, right? That's the objective. Instead of like the thing I see the most with newbie traders, or I think just traders in general, is that they trust that their losses will be wins and that their wins will become losses. And then once they get that like little pullback in their P&L, they feel as if their largest fear is being realized, and then they panic close their decision. Where they probably would have been a lot better either waiting an extra 30 seconds for it to bounce back to where it was, or closing before they ever had that like intrusive thought to begin with. So your objective isn't necessarily to oh, I got to hit 20 points on this or whatever. I think it's to gamify it, right? Because the oh, I got to make $500, I can make $1,000. That's a limiting belief. So your job is to improve the quality of your technique, gamify that, and push your limiting beliefs further and further, right? Or higher and higher. And that'll make your P&L more impressive. So I wouldn't focus too much on, okay, this has to be a 20-point move or this has to be a 30-point move. I want you to focus on closing before you get that emotional reaction prior to your trade, building up that buffer, allowing time in the market to help you control that dopamine better, and then just building up that consistency to, yeah, find that mental capital to trust your thesis. Yeah, this week has been pretty chaotic in general. I've averaged like 2 nights or 2 hours a night of sleep here this week. Um, yeah, it is what it is. I am pretty tired, but I'm also like really fired up. So, it's hard to complain. I do wish I maybe figured out that the company I was working with was based in Singapore before I signed up, because that's causing me a lot of extra time. That time difference is killing me. Yeah, I really like what I do, all things considered. Doesn't always come off that way, but it's a lot of fun. Any other questions here, team? Any other questions? Yeah, have a good night, Shirley. Well, I delay my decision, Tony, until the candle closes, right? It's not that I'm delaying my emotions. I'm delaying my decision in the same way where I wouldn't enter a trade without confirmation. I'm not going to trust my emotional reaction without confirmation, right? So I'm just repeating processes, right? I'm repeating skills that I already use. So if like I'm waiting for confirmation before my entry, and now I'm waiting to see what my exit plan should be, well, why not just wait that extra minute 15? Right? What's the worst thing that's going to happen? Well, the worst thing that's going to happen is I'm going to take a loss that I said I was okay to take in the first place. So I'll either prove to myself that I'm a liar and that I'm not okay taking that loss, or I'll prove to myself that, yeah, I trust my thesis. I can buy myself enough time and I can play it out. So it's the same thing every time. If confirmation for me, right, is strong candle shape, increasing volume, then for me, it's the same thing on post entry candle, right? So on my trade that I took here today, this was my entry candle, right? 952. When it closed, it didn't tell me that bulls were in control, right? It told me that maybe like weak bears. So I had no reason to trust my thesis, and my goal was to get out this P&L is increasing. So once that candle closed, our goal was to close it like in the 490s, but it moved through that 500 really fast. We got that nice little close at 507. And then it hung out and did nothing for the rest of the day, right? Made like marginal highs until the afternoon. An example of where I'd look to hold the trade, right? So this would be an example, hypothetically, right? 1030, high volume breakout, increasing outlier volume, right? I would trade this independently as a setup. I've got no reason to close. So why not hold out for that next position, right? And then you get that decreasing volume. You don't make a breakout through high of day. Yeah, you're probably saying, okay, I've got a reason to start looking for my exit. So it's taking each candle, defining what strength looks like, and then saying, okay, did I see strong price action, right? And if your definition is simple, which is strong candle shape, strong volume profile, then again, you turn that process into a binary, right? Either it is a strong candle or it isn't. Either it is increasing volume or it isn't. And that becomes a really simple decision at that point. I don't know if I want to deal with that. Could you imagine the pirates' language you'd hear around my house? Do you recommend trading your method during the afternoon session? So I get this question a lot. Truth be told, guys, right? If I thought that I had an edge trading in the afternoons, I would trade in the afternoons instead of doing one-on-one calls or working on other stuff, because trading would be a lot more fun and it would make me a lot more money than sitting on Zoom all day. So no, I don't think I have an edge trading in the afternoons with my technique. I think it works best in the mornings and with that momentum. I stop when historically my data tells me I should be stopping, and that's more my circuit breaker more than anything else. So yeah, if I thought I could trade all day, I would. I have no evidence to indicate that I can, so I don't. Yeah, Norman. So we've talked about this in a bunch of different ways here so far today, but it's just that feeling, right? If a trade is making me feel like I need to rush in, then I don't want to take that trade, right? So if I don't want to take that trade, it's like maybe a better way of describing this. Like my emotions when I'm looking at a trade are usually the opposite of what reality is, right? So when I think that it's a guaranteed winner, it's probably going to be a loser. If I think it's a guaranteed long, it's probably going to be a short, right? So when I start to think in absolutes or like lock myself into a decision too early, then I'm not able to like listen to that emotional reaction. But when I listen to, I don't know, it sounds stupid, but like years of experience trading this now, intuition, studying my decisions, understanding my habits, understanding like what my trigger points are that break me, like seeing how that all blends together, like that's the personal thing of trading. Like we've all, like, this is the thing that drives me fucking nuts sometimes. But I could tell you exactly when to click the button, when to click the button, when to click the button, right? On your entries, on your stop losses, on your exits. And people would still do differently, right? And people still do differently. So it's not a question of like you don't know what to do. It's always a question of you don't know how to control yourself, right? So if I can focus on controlling myself, I can generally buy myself enough time for the market to do its thing and find myself my correct entry. I would think most of you guys, when you were to look at like your intuition of the market, you don't have a problem in getting the direction correct. Like you probably get it 51% of the time or better. It's you have an issue in getting your timing because you see a setup and you worry that it's going to go right away. So you blow your load before it ever gives you a chance to like settle in and actually give you the opportunity that you're looking for, right? So we want to make sure that we still have ammo in the tank. And the big thing of that is basically just controlling your emotions, right? Thinking of baseball stats as price action is pulling back instead of thinking of your PNL. And the baseball stats in this thing, right, are the technique stuff. They're the, okay, what are the variables I can control? Do I feel myself losing control of those variables right now? Okay, if yes, let's delay, let's delay, let's delay. And from experience, and this is just anecdotal, but generally the first time I feel like it's time to enter a trade, I'm usually still early. And I've got plenty of evidence of that in my own trading and in, like we talked about, the fake out entry technique, right? The reason why I switched to that. So it's like the first time I think I should enter a trade, I'm usually still probably early. I imagine many of you guys are the same with that sensation. And so it's just about finding ways where I can make it easy for me to get asymmetric upside in a repeatable process. Just don't want to make decisions under emotional duress. You don't see things clearly in that moment, right? And you'd just be surprised how often your brain or your body or your system, your technique, your perception of it sabotages you into taking trades you don't actually want to take. So that part, right? That part is a personal journey that is unique to you. I can't tell you when to do that. You have to make that decision for yourself because I can't control your basically voices or thoughts in your head, right? So you have to learn how to be the master of your own domain, to go full circle on a weird analogy. And it's important that you take control over those decisions, hold yourself accountable to that as much as possible. and generally you'll feel more controlled, right? So the element, your entries, they're kind of random. They're either going to work or they won't. So it's about making sure that you're entering positions where you're in control so that you can execute your plan how you wanted, right? When we enter out of control or while emotionally volatile, we just make it super easy to compound mistakes. Yeah, like if you ever look at someone who's depressed, what's the first thing you'd see? Their posture is hunched over, their neck is like, lizard neck, and they're really short and shallow breathing, right? So you see your body have these like changes when you're stressed out in a trade. And if you catch yourself and you can snap back in and you can find your focus again, you'd be surprised how often you can kind of snap yourself out of tilt. All right, guys. Any other questions here? Any other questions? Pushing on that hour. Hey, you guys should have heard the language on a trading desk back in the day. Holy. You guys think I'm crazy. You know what it was, Joshua, more than anything else, is no one got offended by anything you ever said. Like, yeah, no one ever got offended by anything you said. Like, nothing was out of bounds, nothing was too far. Yeah, it's not like people were saying like, oh, like I'm gonna fuck your wife or something. It wasn't ever stuff like that, but like there was nothing that was too risky, right? So it was a really fun environment in that context. But there was also a lot of like, bullshit in politics and talking behind people's backs and gossiping like high school girls. Like, it was something else. And you know what? Like, what I found too is when people stopped, uh, like cussing you out or giving you banter or like poking your ribs or whatever, like that's when they stopped caring, right? Or like when they stopped being invested in you. Like it's like when they get apathetic about you and they don't give you a reaction or they don't whatever, kind of like, oh, management's given up on this trader, right? So I think a big part of it is just having thick skin. I also think a lot of it too, and then maybe this is cope, but I think a lot of it was like you'd let whatever you wanted to fly out of your mouth because it was better to be reckless with what you said than being reckless with how you traded. So it's like you wanted to get a reaction, you'd say something outrageous versus like doing something with a position. So tilt, I would say is when you start making trading decisions that you don't want to make or that you know aren't good for you in your trading account. Some people can describe it as like an out of body experience. Some people can view it as like boiling rage, but it's any time you have lost control or perceived control over your trading. I think there's a part of that for sure, Joshua. Yeah, I think for sure. We're like, I don't know. And I hope you guys do it the same way with me. Like you could have a huge blow up with someone, and then the next day you'd come back to work, you have a good shift, and you want to go for beers with that person after, right? You wouldn't think about it the next day. Those kind of yeah, it was really rewarding because it was an extremely honest working environment. Like you always knew exactly where you stood. And if you didn't know, you could just ask. Kind of funny. All right, guys. Final call for questions here. Final call for questions. Yes, and like always, I will let everyone know in the members chat when we're good to go. Well, like I've said multiple times, I want you guys purchasing them. I have no incentive to block off your access to them. So just bear with me, man. I'm doing my best. Yeah, you know how it is, Greg. You know how it is. I think it's never personal. Like there are only a few people who I have ever truly disliked while working here or doing DTR, this being kind of, you know, my gig. And all of those people have been kicked out of the program. So, you know, if I didn't like you, you wouldn't be in this chat. I would have told you to fuck off. But it's not worth the effort. Whole point of being self-employed is you just don't work with people you don't like. It's the big perk. Different for everyone, right? So everyone has a different scenario of what's best for them and like what their financial situation is, right? Someone who's let's just go extreme examples, right? Jeff Bezos, if he were to buy 5 eval accounts, like he doesn't really give a shit, right? But the homeless person who's looking for their next 2-6 or their malt liquor or whatever, their hit of fentanyl, like trading 5 accounts might be a bit much. So, you know, it's relative to each person. It's a crazy example, but figure out what's best for you. Like be selfish. I would always say in general, people think that they can stomach more than they usually can. And it's best to be yeah, it's best to start small and be able to scale up than be starting big and forced to scale down, personally. Hey guys, last call here. Last call. Like the less variables you have to worry about, the better, right? So guys, just a heads up, there's only a few of you left in here, but um so my goal for rest of the evening is to try to get that production key all wired up here for this so everyone can get back to making purchases. It's 8 or 7:30 here this morning. Jumping on a call in a second, see if we can get this all sorted out and fixed. I have no idea how long this will take. In the past, it's kept me up till 3 or 4 o'clock in the morning. If that's the case, right, I'm not going to stream tomorrow. I'm hopeful that it's just going to be a pretty easy hot swap and fix, but who the fuck knows? So just giving you guys a fair warning. Still a little bit of a cluster here today. And yeah, like I just said, right, it just depends. So I'm hopeful this will be a really quick fix, and you guys will be able to purchase accounts, 30 minutes or something. But we shall see. We shall see. I'm personally, I've gone to the point where I just don't expect tech things to ever go smoothly, but we'll figure that out. All right, guys. So yeah, hopefully I'll see you in the morning. If not, still a good trading week, all things considered. And yeah, weird week, but we'll be back at it again tomorrow. We'll do another one of these calls on Tuesday. Oh, excuse me, every Tuesday and Thursday going forward, right? That's the move. At short term, still keeping my one-on-one calendar very restricted until basically I've got everything running with the prop firm as expected. So just bear with me in the short term. Yeah, you can just email me, michael@dtrtrading.com, and I'll do my best to answer reasonably well. All right, guys. Peace.